Hi guys, today we will talk about how almost everyone or every business in the world is making money and how you can do too if you learn the technique. Now, I will explain this with a very simple example. The purpose of this video is to give you an idea of how money is created, how money is invented. That way you know the science behind it. Let's say there are two people in a city. One, this person over here, and then another person over here. Each of them has $2,000. So their money in total $4,000. Now this guy over here is planning to start a business. It can be any of his idea or it can be anything business, basically where he will be making money. It can be a real estate, it can be a car rental business, it can be a furniture business, it can be a online shopping business or anything. So he thinks I will borrow $5,000 and I will run my business and I will make profit from it. So since this city has only two people, he basically goes to this person and borrow $5,000. Now you might be wondering, hey, wait a bit, stop over here. This person has only $2,000. How can he lend $5,000, right? Well, this person doesn't necessarily need to have $5,000. He can also get from outside or from a lot of the people or a lot of the companies. So let's say he is, by whatever means, he is borrowing $5,000 to this guy and he is starting a business. Now, for understanding simplicity, let's talk about he is making for example, a rental property where he borrow the full amount of money and he buy a property for $5,000. Now, as soon as he borrows this money, there's some magic happens. Now, what's the magic? Think about this. This person worth become 5,000 plus 2,000 equal at least $7,000. Now you may say, wait a little bit. He owes $5,000. So it's not actually the $7,000. It's less, right? But the thing is, he at time goes, he will be able to pay all of them. So I'm basically not calculating anything about account payable and the account receivable. All I'm basically showing you the current state. And those who know accounting, they know what I'm talking about, account payable and account receivable. I'm not going in detail about the accounting. So this person has $7,000. Now this person over here, if he borrow $3,000 for giving this guy $5,000, then all of his 2,000 is gone. Then this person has at $0. Or if he borrow the $5,000 all, then he has still $2,000. That's why I said over here he has greater than or equal $0, and this guy over here has greater than or equal $7,000. Now, if you see what's the amount over here in total, this total now city has $7,000. See over here, it all on a sudden the wealth of these two people increased from $4,000 to $7,000 just by borrowing money. Over here, I highlighted money is created when it is borrowed. So all of the money, how they are created when they are borrowed. This is one of the example over here. See, $3,000 created when this person borrowed this money. Now as time goes, let's say this $5,000 is payable in a 30-year mortgage. Now if this is, I consider this with a 6.5% interest, 30-year mortgage. If this is so, after the end of 1 year, this person will basically have at least $7.1 thousand. I only calculated the amount he has paid for his liability. Of course, this is a business, he will be making some money, so that's why I put a greater than equal, meaning he will have at least $7.1 thousand. And this person over here, in terms of payments, will receive at least $900. That's why I said 0.99K. So in total, if you see, it's $8,000. Over here, just 1 year before, it was $7,000. Now over here is $8,000. Money is getting increased. Now at the end of this mortgage, this person over here will have, let's say he makes no profit in 30 years, which is realistically impossible. That's why I put a greater than equal over here. If he makes no profit over here, he has $7.1 thousand, and this person over here has $11.4 thousand. Now if you think just in a mortgage calculator, if you see how much the loan payment for $5,000 in 30 years, that's the almost this number. So in total their money is about 18.5K, 5K, meaning $18.5 thousand. So that's how their money are increased. See, both parties are increasing their money. Now this person over here can be a business, can be a bank, right? Bank are basically lending money. Over here, remember when I said this person can borrow money from people, this person, if this is a bank, this bank can borrow money from people. So when this person lends this money over here, there are two transactions created. One is the deposit liability and loan asset. So it's a deposit liability, loan asset. I'm just trying to make you familiarize with those terms. What is deposit liability? Because this person has borrowed this money. If he doesn't have this money, then he has a liability of depositing this amount to make his balance sheet. And loan asset meaning the loan he basically provided over here, he is making money in terms of the payments and interest. Now, most important of everything over here is ask yourself, this person borrowing $5,000, is he paying any tax for this $5,000? The answer is no. Now the question is why he is not paying tax? Well, that's because he is borrowing money, he is paying interest, and he is creating money. Again, money is created when it is borrowed. So he is inventing money by borrowing money. He is making his city richer. As soon as he borrowed money, his city got $3,000 richer than it was before. So he is creating money, he is inventing money. That's why government doesn't tax him. Do ask a why and how question for everything related to tax and debt. If you really need to understand money, you need to understand tax, because all of the science of the monies are hidden into tax. So when you are paying your tax yearly with your CPA, try understanding what this guy is doing. Ask yourself why this is happening so. If you are paying on something tax, how can you not to do so? How can you reduce this tax? And whenever you get in some debt, learn more about how the debt work. Now I want to make a pause and make a very good caution over here. Just because you know this guy is basically inventing money, creating money by borrowing money, don't just rush into your bank and borrow money. You need to be smart to borrow money, because as soon as this guy is borrowing $5,000, he has a $5,000 liability, and he should have a business or whatever the process is, should be able to pay this 5,000 mortgage over whatever the term is and still making profit. Otherwise, this guy will be bankrupt at some point. So you need to learn the business or idea first before borrowing money, and then you can borrow money and create wealth. And same for the other side too. You can invest and basically, increase your money. Now, banks over here or lender over here love lending money. What does it mean? They are living and they are basically doing their business for those guys. That's because, they are borrowing money, and that's why, bank loves them. So keep it on your mind, when you are going to borrow money, bank love you. Now, they want to lend money, but they cannot lend it to everybody, right? Because, they need to make sure if they will be able to get their 5,000 in this particular case back if you are not able to make payments or return your borrowed money. So it's like the frequencies. There are hundreds of frequencies or thousands of frequencies out there. How much you can receive? If you have the device capable of receiving one or two, you are receiving those. You cannot receive all. So you need to be smart for receiving those signals. Example, if you want to borrow money, the very first step could be, are you a good person? Meaning, what's your, whatever score is, FICO score is, whatever your TransUnion's credit score is, whatever your other score is, meaning how good you are returning your money, right? Well, at some point you will understand FICO score is just nothing but, measure how well you repay your payment. All I mean to say is, think about this in your mind, how money is created when it is borrowed, and ask all of the questions with a how and why about the debt and taxes. So all of the debt you have, ask yourself how and why type questions. Why you are in debt, what happens to your debt, and then how do you pay off your debt, and same for the tax too. I'm very sure you will become a smart and even smarter when you know the why and how question with debt. Thank you for watching.